All right, what up, everybody? As you guys know, the markets are going nuts right now. Coronavirus scares shaking everything up. Just wanted to go in and break down a couple of charts, talk about some stocks that I'm looking at, some good investment, some good buying opportunities within this market. Trying to figure out how to not only not lose money, but be able to make money in a situation like this, which is not easy, but it is doable. So I wanted to bring up a few charts. First, let me just discuss the fundamentals of the market. Yeah, we got coronavirus going on right now. NBA just canceled the season. We got baseball just pushed their season back 30 days. NCAA tournaments being halted as we speak, which is just really crazy. It's something that I don't think has ever happened before due to something like a virus. But beyond the virus, I want to talk about the fundamentals of the market. I do believe this market was due to correct pretty heavily. Anybody that knows me knows I've been, pretty much talking about that for the last 5, 6, 7 years or more. The Fed is doing everything they can to keep the inflated economy going by keeping interest rates low for a record-breaking amount of time. I think rates have been this low for about 6 years now, which is just unbelievable. It's never been done in the history of any market, I believe. You guys can fact check me on that. But, like I said, I believe this market was due for a correction. I know Trump and everybody was saying, the economy's great. It's never been greater. It's a perfect time to buy. We have the best economy in the world. But the truth of the matter is, that's not the case. If we're looking at the economy as a business, first we want to look at the bank account of that business. The bank account being the national debt. Either it's a debt or it's a surplus. Going back just early as the 80s, we had a surplus in our national debt. But just a couple presidents later, through George Bush, Obama, and Trump, we now have a negative, a $22 trillion debt. And some mainstream economists might tell you that the debt doesn't matter, but the debt definitely matters, and it has a huge impact on the overall health of the economy. The second thing we want to look at, if we're looking at the economy as a business, is the trade balance. The trade balance represents essentially the cash flow of the business. And you get to see the trade balance and see if the business is making money or losing money every month. And if you look at the US cash flow, the US trade balance, we're at like negative $60 billion a month on average. So number one, the bank account of the business is negative $22 trillion. Number two, the cash flow of the business is losing $60 billion a month. That is definitely not good. It gets to a point where you have to look in a market and ask yourself, is this market going to continue to go up, or is it run its course? And one of the easiest ways to kind of get that answer is figuring out if people are struggling or if people are doing great with the cost of living. And I personally think the cost of living is way too high. We're looking at rents of apartments here in Orange County at $2,000, for a basic, one bedroom apartment or two bedroom, even nothing too crazy. And we're looking at situations where you need multiple roommates to even afford to be able to live in California. So I think the easy answer on the real estate prices is that it's overpriced because too many people are struggling to barely afford to live, and their main expense being their rent. So that's just a recap of the fundamentals of the market. I don't want to go too in depth on that. I just wanted to bring you up to speed on what I'm looking at. So now let's dive into some markets and let's see what's going on. So we'll take a look at the S&P 500. This is the S&P ETF index. We see here on February 19th was the peak of the market, and it ended up, in the last, since February 20th, essentially falling, a very significant amount all the way down here. As a trader, I'm not looking at this crash and going, oh, this market's going to zero. I'm actually looking at this market, looking for possible rebounding opportunities. I do think it's going to go a lot lower, but let me explain. We had an area on price where we had a dip and we had a very explosive movement from these prices between about 247 down to as low as 233, the price decided to explode, breaking new highs, breaking these previous highs right here, creating higher lows and higher highs, defining an uptrend all the way up to this point where we then broke new lows. So this area of price is very significant to me. Yeah, this is the way I trade. I trade based off of price action. A lot of people have algorithmic based trading systems. When the moving average crosses and the parabolics reverse and the Bollinger Bands widen up, and the MACD and the Fibonacci's line up, you take a buy entry. Well, I used to trade like that, and early days, that's everything you get taught is how to kind of put together your own trading system. But one of my main signals for entry points are areas on price that originate an explosive movement that breaks new highs, which this area right here is the exact definition of that. And as we can see, the market came right down into this zone right here and is already showing a little bit of support. And I'm sure if I zoomed in to a day or an hourly chart, you would be able to see the support taking place right here. But this might be a good time to maybe place a very short-term buy opportunity if you have some cash on the side. Now, I wouldn't be buying for long. I'm talking about a very short-term bounce potential, but I do believe we entered a bear market, and we are looking for selling opportunities more than buying opportunities in this market. So after we get a nice little bounce out of this area here, I could expect this market to come up to the areas in which the market forcibly sold off and exploded downwards. So either this area right here or even all the way up to this area right here on price would be another area that I would be a seller if this market were to rebound into those prices. So if we do get a bounce, I might not necessarily buy here just because of how strong the downward pressure is, but I'm saying I wouldn't be surprised to expect a bounce at this price, and I wouldn't be surprised to see it bounce all the way back up to around 290 or 310. And keeping an eye on all the financial news networks talking about the crash was short term based on coronavirus scares. It's a perfect time to get back in this market. I feel like a lot of people will get back into this market just to have this market possibly run back lower and create an even lower low over here. So that's my analysis on the overall S&P 500. Look for a rebound in the next few days up to around these prices right here. And if they do get back up into here, look to either sell some positions or even buy a put option to take advantage of this market going lower. So that's the overall market right there. Let's take a look at some other markets I'm very interested in buying.